Hello, welcome back. On this video we're going to be talking about fundamental trading, fundamental analysis. Trading is split up between two different forms of analysis, fundamental or technical. I'm going to split this little section up into two videos. On this one we're going to be talking about fundamental analysis, and the next one we're talking about technical. So where do we get our fundamentals from? It's all based on news events. Like I've got up on the screen, I've got Bloomberg coming out on the right hand side here, and the left hand side I've got my FX book, which today a news event is United States trade balance. That's coming out in about 4 minutes. We're not doing any trading on this, I'm just going to have a little look, just see what numbers come out and what effect it may have in the market at the time. So these are my main sources if I was looking at fundamentals. I tend to stick to technical myself, but I feel it's important that you need to know what's going on in the fundamental side of trading, especially in the large events. Economical events are used to gain an idea of the currency's value. So when people have a look at the unemployment rates in certain countries, like this one here, initial jobless claims, obviously here we had the recession, the unemployment rate was very high. This is bad for a currency. As the peak of the recession went down, more and more people get jobs, and unemployment level goes down, and the currency gets just a little bit stronger. So the more workforce they have, the better for the economy. There's many things that actually drive the economy, and it's people's perception of what's actually going on in the markets, in the countries, that actually determine the value of the currency and push it in a relevant direction. Now, when you're trading fundamentally, when you're looking at a chart, the price is not relevant at the time, because you're actually basing your trades on the future outcome of the currency. Much like evaluating a business or a stock. If they come out with new products, the stock tends to climb up a little bit. Much the same as dealing with currencies. In fundamentals, big moves come from unexpected results. So we can see the news just came out here on trade balance. It's a little bit better than expected. Just jump over to the charts here, 1 hour charts. As you can see, not really a lot happened right there. Okay, so everybody's got the news, it just came out a minute ago. Not a big deal, because the numbers are all in line pretty much within a couple thousand billion. Now the big moves actually come from unexpected results. If the changes in these numbers were very considerable, then you would see a large influx of people either buying or selling depending on those results. And these numbers can actually start new trends if the numbers are larger or less than expected. So it is something to look out for, because they are trend changers. Okay, so it's important to know what goes on there. So what moves the market? Countries' earnings, their GDP figures, which is a gross domestic product. That's a big mover. It shows economic strength. It's all to do with imports, exports, and how much country actually produces for itself. If it exports more than it consumes, then it's good, and if it consumes more than it can produce, it's always a bad thing for it. So the market tends to go down on that respect. Economical growth, much like if you have a large workforce, everybody's paying their taxes and everything seems good for that. The less people you have in work, it costs the government more money. So economical growth actually shrinks over this period, such as during recessions. Financial strength against different currencies. Let's say, for instance, when the US dollar starts failing, a lot of people flee to another currency, so much as the Swiss franc is always a popular one. So when you trade the United States Swiss franc, you'll see the Swiss franc climbing in financial strength against the US dollar. Interest rates are always a good sign of a good economy. Higher interest rates means better lending facilities. The money flows a lot easier between countries. Trade deficits, much like we just witnessed here on the trade balance, that's another thing to watch out for, looking for the big changes. Banking announcements, any changes that it might have, changes in their interest rates. It's very important to people's spending, availability for lending. If they don't lend money, people can't start businesses, people can't buy houses, and the whole economy slows down. So banking is very important. Speeches from governments or financial institutions, such as the Federal Reserve, they're very important because any slight little changes in there can dramatically change the way we live our life. So it's very important about that. Changes in laws, political changes. Political changes, there's a big one going in Scotland and the UK just now. Scotland are fighting for their independence. Once this unfolds in September, there can be some very considerable changes in the pound if Scotland breaks away. These things happen all the time, but it's very important to know what's going on between these countries. And unemployment is one of the biggest factors in market moves, like the jobless claims. We've got here the previous jobless claims, 302,000. They're expecting 305,000 people unemployed. Let's say if they had less people unemployed, it's a good thing for the United States dollar. If this goes any higher than 305, if it goes to 310 or 320, you're going to see some major falls in the United States dollar based against different currencies. So always keep your eye on them. I tend not to trade them myself. It's not my style of trading. I've done it before. I don't really like it because it's very volatile and emotional. So what do we do when we evaluate these numbers? It's basically just like you're evaluating a company. Let's just say Apple. If their earnings for the quarter never met the analysts' expectations, then the stock value will plummet or it will rise depending on the figures. So we evaluate countries like companies, like stocks. Okay, so my view on fundamental trading, it will be different for you. I firmly believe that the markets move with fundamental analysis as much as it does technical analysis. The market's built off of both of them. A lot of people believe it's either or. I'm a firm believer that it's driven by both of them. The 50% of the people out there listening to the news, 50% of the people out there watching the charts, using their technical analysis, moving averages, basing all their trades on this, not listening to the news. Okay, but for me, listening to the news gets me very, very emotional, same as everybody else, especially when you've big announcements coming out. You can feel your heart racing. Everybody's got an anticipation of big numbers, smaller numbers, big moves in the market, but it's a two-time incentive. Just sitting here listening to the news, doing a little bit of research about different countries, just watching the news all the time, keeping up to date with all these numbers. I just rather stick to technicals and visuals on the charts. Makes it a lot easier, especially when you're on the go and you're kind of busy that day and you can't watch the news. It is labour intensive keeping on top of everything, because as you can see here, August 7th, if you trade a few currencies, you've actually got quite a few announcements coming out. And if you're not sitting by your computer at 1:30, 12:45 my time, you know, it's very hard to have a good idea of what's actually going on. Whereas if I've got my phone, I can have a look at the technical charts and make my decisions every time I place a trade. And also, with the news announcements, it is very, very volatile. When you do get a slight change, it's all to do with the people's perception. When you're sitting on the computer and you're very emotional and you just want to trade, you know, you got that feeling. A lot of people do this, and it can drive the price of the currency up to a level where people don't actually perceive that's its true value. So any gains that it might just made in the last 30 minutes, they can come crashing right back down and carry on in the relevant direction it was going before, because the technicals were actually stronger than the fundamentals at this time. So I tend to listen to the news, just have a little half an eye on these numbers coming out, just to see if there's going to be any new trends that might start. But I don't trade the news. It's too risky. I've blown 2 accounts at the very, very beginning of my trading doing this, and I advise you not to jump into news trading, but just keep your eye on the fundamentals of the currencies that you trade, especially the US dollar, considering it's a world's reserve currency. So another thing to consider is large institutions actually know the numbers before they get released, so they can actually make the trades a couple hours before the announcement comes, and then they'll be ready to take the profits as soon as the announcement comes out. There'll be a lot of whipsawing about because of the large volume of people entering and exiting the markets. It's a very high money flow at the time, and there's also the issue of the spreads during news announcements. A lot of people don't actually increase their spreads just now, but some of them actually do. So what do we listen to when these news announcements comes out? The important ones will be the Federal Reserve making any announcements about changes in legislations, NFP, which is non-farm payrolls, which comes out on the first Friday of every month, and that's unemployment jobs for the non-farms payrolls. Treasury departments, this all to do with trade deficits, GDPs, interest rate changes. This is very important because higher interest rates, which should be coming pretty soon after coming out of a recession, higher interest rates means a better economy, which also means a stronger currency. Unemployment changes, we kind of touched on that, but you've got 2 different unemployments. You've got initial jobless claims and you've got the NFP, so there's 2 to watch out for there. GDP, gross domestic product, that's a big mover. Higher GDP also equals higher interest rates because it's a better economy when they've got more exports going on and they've got good world trade happening, which all leads to a stronger currency. and trade budget, all to do with how much the countries are actually in debt. So I'll just try and open this up. So up here I've got the United States debt clock. This will all come down to the trade budget. These all these news announcements will be spitting out all these little figures: gross domestic debt to GDP ratios, revenue to GDP ratios. This is what all moves the market right here. And you can imagine you've got one group of people, they'll be focusing on certain types of numbers, and then there'll be your group of people, you'll be focusing on some certain numbers, and then you've got another group focusing on these numbers. There's a lot going towards fundamentals. It's not as simple as just watching a couple of news announcements. One news announcement may have a big move, and another news announcement won't even move the market at all. It's all a balance between your national debt, between GDP and everything else. There might be a very, very complex formula in there somewhere, but yeah, if you can figure it out, good on you. But okay, so that's basics of fundamentals. If you want to touch on this one a little bit more yourself, you're just going to have to do a little bit more research, and it is very labour intensive in research and what the numbers actually mean, and just checking out the volatility on certain news announcements. Usually once a month they'll come out, but pretty much it's going to be quarterly, yearly. But I don't recommend getting into news trading, but definitely know what's going on with it, and know your countries, know how much debt they're in, and just try and get an overall picture of where they're going to be going for the next year. Big changes mean big trends, and if you know the trend at the time, if things are looking good, you start buying at the bottom, you keep a hold of your trades, and you just keep buying on dips, but that's when you know a good trend is in place. So if you know the United States is coming out of recession, now's the time to start thinking about buying, just buy and hold for until something else changes. So okay, so that's it for fundamentals, I'm afraid. I tend not to go into this too much, but we'll be a little bit more on the technical side in the next video, so that'll be on the one below. So I hope you'll enjoy the next video a little bit more. Okay, see you on the next one.